Hello friends, welcome back to my YouTube channel Happy Investing. In this video I will explain you briefly on what are gilt funds, are gilt funds totally risk free, taxation of gilt funds, and when and who should invest in gilt funds. So gilt funds are type of a debt mutual fund. These funds invest in government securities issued by central and state governments with medium to long term maturity periods. According to SEBI, gilt fund needs to keep minimum 80% of its assets in government securities. There are two kinds of gilt funds. One, gilt fund that invest mostly in government securities across maturities. Second, gilt funds with constant maturity of 10 years. Now I come to risk associated with gilt funds. Gilt funds are considered to be one of the safest type of debt funds in India with zero default risk as they are backed by the government. However, gilt funds are not totally risk free. The biggest risk faced by gilt funds is interest rate risk. Gilt funds and interest rates have inverse relationship. If interest rate increases, return or NOV of gilt fund falls, and vice versa when interest rate decreases, return or NAV of gilt fund rises. Let us understand with the help of a simple example. Suppose the current interest rate is 6%. RBI issues bond A giving 7% interest. After a year, the interest rate falls to 5% and RBI issues new bond B giving 6% interest. As expected, the demand for bond A will go up because it is giving a higher interest rate. When demand increases, the price of bond A will increase and also NAV of a gilt fund. Simply to understand, investor in bond A would have dual benefit, that is 7% interest rate plus appreciation in bond price due to fall in the interest rates. Similarly, when RBI increases interest rates, the demand for older bonds carrying lower rate of interest falls. This reduces their demand and price and NAV of the gilt funds fall. So if the interest rate rises sharply, the NAV of a gilt fund can fall drastically, which might result in negative return over a short period of time. A falling interest rate is good for gilt mutual funds. This is the reason why gilt funds are providing double-digit return in last 5 years in India. Now I come to taxation of gilt funds. For gilt fund, the short-term holding period is less than 36 months and long-term period is more than 36 months. The short-term capital gains are taxed as per individual tax slabs, while long-term capital gains are taxed at 20% with indexation benefit. Now I come to the most important thing, when and who should invest in gilt funds. Investing in gilt funds can be a safe investment if timing of buying is accurate, linked to interest rates. Investors should make sure that they do not invest in gilt funds when interest rates have formed a base bottom, like current situation in India. If you want to invest in long-term gilt funds, buy them when interest rates are expected to decline. Always take advice from your finance or investment consultant on interest rates before investing in gilt funds. Gilts are suitable for investors having investment horizon of at least 3 to 5 years, with first and foremost priority is safety of their investments. Further, over the long term, investor can ride the interest rate cycles. So thank you friend. If you found my video interesting, please like, comment and share my video. And subscribe to my YouTube channel Happy Investing. Stay tuned for my next video on top 3 gilt funds 2021.